Good morning, everybody. Jason Bowman here from Prolera, and welcome to today's presentation of the IRS collections process from the perspective of the collections notice cycle for a tax debtor. A couple reminders before we get into things today. Make sure that you stay logged in for the full hour and submit answers to all 3 polling questions in order to receive your certificate of completion. Every webinar I have at least 3, 4, 5, 6 people that answer 2 of the 3 polling questions but miss the third, and I don't know if it's because they don't hit the submit button in GoToWebinar or what, but I'm not, this is an IRS and a State Board of Accountancy regulatory thing. I can't issue certificates of completion if you don't submit an answer to all 3 polling questions. If you have a glitch in your internet connection and miss one of the polling questions, or something happens where GoToWebinar doesn't log your answer, I can't go on the honor system and just take your word for it. I'm required by law and regulation to go based on what the system says. Make sure that you actually submit the answer to the polling question so that I can send you your certificate for that, okay? The slides are available in the handouts pane in the GoToWebinar control panel. And also a reminder for P10 holders, EAs, etc., the IRS CE portal is still offline. So I cannot, no CE provider can enter hours at this point, and they have not provided us any indication of when the system will be back online, so your hours will not appear in your P10 account. And that's whether you're taking webinars or self-study or whatnot from us or any other company, okay? No, the system does not exist right now. So, and the reason I'm emphasizing these 2 things about the polling questions and the CE portal is I literally get several emails pretty much every day from folks asking about this. So our course objectives today are to understand how tax liabilities are created, take a look at the IRS collections process, identify the notices in the IRS collections cycle, and understand the ramifications and opportunities for some specific notices in the collections process. So I would kind of expect that most of you already know this, but I will cover it here real quick. Where do tax debts come from? There are 3 places where most tax liabilities arise. First of all, obviously, the taxpayer files a tax return with a balance due on it. And if that balance due is not paid, there is a tax debt that will arise. If the taxpayer fails to file a tax return, then the IRS can, under Internal Revenue Code section 6020 subparagraph B, file an SFR against the taxpayer. This is a substitute for return. The IRS will use information that they have, W-2s, 1099s, etc., to file a return on behalf of the taxpayer. This tax return will only give the taxpayer their one personal exemption for themselves, no dependents, none of that other jazz, no credits, nothing. Even if the IRS technically has that information from, say, a previously filed return, the IRS just assumes the worst case scenario, and you don't get any of the additional credits, exemptions, deductions that you'd be entitled to if you've prepared your own return. So after the IRS files a substitute for return, there is a statutory notice of deficiency that is generated. That's the 90-day letter. And after that, there is an assessment. Assessment can also arise from examination. I am not too versed in the examination world. I never practiced in that arena. I'm a one-trick pony on the collections side. So pretty much anything bound to CP 2000 mail audit, I'm pretty much lost. But do note that there's a statutory notice of deficiency that can arise out of examination, which also yields an assessment, and then that goes into collections as well. So these are the three primary pathways for ending up with an assessment, and if it's unpaid, it will end up in collections, of course. Okay, time for polling question number 1. And again, make sure that you actually hit the submit button so that the GoToWebinar system actually logs your participation. And it doesn't matter what you actually answer on these, by the way. It's just that you answer something. So please take a moment to do so. Again, in the GoToWebinar control panel, to get the handouts, go up to the View menu, make sure that the Handouts pane is checked, and then the PDF is in that block. So I'll leave the polling question up for another 10 seconds. How do you keep a bull from charging? The punchline is take away its credit card. All right, closing the poll. All right. So now let's take a look at the actual IRS collections cycle. Most of my practice experience actually comes from representing 941 tax debtors. But the cycle is identical for 1040 debtors, just it only happens once a year instead of 4 times a year. It's one of the nice things about working in the world of 941 representation. One, that's where about 2/3 of the tax debts come from anyway, so it's the majority of the market. But also it is a perpetual never-ending cycle, because the IRS notice cycle is about 4 months long, and for businesses that continue to accrue additional liability, we call it pyramiding. It is literally a never-ending cycle because there's a new 941 every quarter. So this never-ending cycle in the 941 world is good for business for us. So don't forget also that most tax debtors don't just owe for one tax period. The average 941 debtor, in my experience, owes for 2 to 3 years. The average 1040 debtor owes for between 3 and 5 years. And they also tend to have an additional 3 to 5 years worth of unfiled returns that they're going to owe additional monies on. So these cycles are overlapping when you have multiple tax periods involved, and it's literally a never-ending cycle. It is a vicious circle. A couple other words on the 941 side. Understand that the SBSE division, Small Business Self-Employed division of the IRS, the 941 liabilities are their highest enforcement priority. And the reason for that, if you ever look at a Treasury daily statement, you can go to treasury.gov and pull up the daily cash flow statement that's published every day. for the federal government. And you'll see that there are two things that fund the day-to-day operation of the federal government. Number one is payroll tax deposits. Okay, federal tax deposits are what fund, in terms of incoming money, are what fund the day-to-day operations of the federal government. The second chunk is transfers from the Social Security Trust Fund. So when you start hearing about the political rhetoric about the bankrupting of the Social Security Trust Fund, it's because that money is being transferred over on paper anyway to help fund day-to-day operations of the government. So the enforcement of those 941 payments are of utmost importance to the IRS. The key to obtaining any resolution is breaking this cycle, okay? And on the 1040 side, it's a lot less stressful because there's this massive time gap between each of the cycles, assuming that the returns have all already been filed. But on the 941 side, it's very stressful because there is no time lag. For a small business that is continuing to accumulate more tax debt, this cycle is never ending and they start to overlap each other. So the gist of the cycle is that the IRS will process a return, make an assessment, then they send two bills. Under the law, the IRS is only required to make one notice and demand for payment. By practice, they usually send two. Okay, they'll give the taxpayer two opportunities to pay a bill instead of the statutorily required one before filing a notice of federal tax lien. And that's a typo. That should say NFTL, not NTFL. So then there's notice of federal tax lien, which will be filed for 941 debtors that are continuing to pyramid liabilities, even if that individual amount is less than $10,000. But in general practice, if it's a new debtor, especially on the 1040 side, the IRS will only file a tax lien if it is more than $10,000. 30 days after the notice of federal tax lien is a CP 504. After that is an LT 11 or letter 1058, and we'll get into each of these in more detail. So this is the vicious cycle, and breaking this cycle is the key to obtaining a resolution to any tax liability. No resolution is possible. You cannot get a payment plan. You cannot get an collectible status. You cannot file an offer in compromise. You can't get any resolution whatsoever unless the taxpayer breaks this cycle, okay? And a big part of the value that you bring to the table as a practitioner is guiding your client towards breaking this cycle. That's a significant chunk of the value proposition that you deliver. So let's first talk about the bill. These are sometimes referred to as a 21-day letter because of the fact that the IRS will put a nice little note on there saying, we're going to be generous, folks, and if you pay within 21 days of this notice, we won't whack you with further penalties and interest, P&I. So this is a bill. There are several common notices that you'll see. Anything that begins with a CP is automatically generated by a computer with no human intervention. Okay, so a CP 11 is, when a return was filed, the IRS computer system detected a miscalculation. A CP 21 is that some other type of correction was made. CP22s come out of audits. Letter 2257Cs, 3030Cs, these come out of service centers. This is a balance due notice from a service center. So a human being looked at the return, made an adjustment, and issues a balance due notice. There are other bill types. These are just some of the most common that you'll see. Again, 21 days to pay and avoid further penalties and interest. Now we get into the real fun stuff. The notice of federal tax lien. Here's what I want to say first about tax liens. Under federal law, okay, this is not IRM, this is not policy procedure, this is federal law. A statutory tax lien arises automatically 10 days after notice and demand for payment. Okay, remember the 21-day letter, the bill, is a notice and demand for payment. After being unpaid for 10 days, a federal tax lien automatically arises. Okay, so there are people that refer to this as the quote-unquote silent lien or secret lien. I don't like those terms because it should not be a secret. As a practitioner, this is something that you should be aware of, and it's something that you should counsel your client on. So even if they owe $5 to the IRS, okay, and no notice of federal tax lien is ever filed, there is still a tax lien against them that the IRS can enforce, okay, by statute. The 668Y, the paper notice of federal tax lien that's filed with the state, Secretary of State, or with the county clerk, that is simply the public notice, the public record filing. So, but even without that existing, there is still a federal tax lien in place against anybody that owes 1 red cent to the IRS, okay? And that statutory tax lien covers the exact same things that the paper lien notice does. The IRS has a claim on all of the taxpayer's property and rights to property, okay? The IRS has been slowing down on their lien filings over the years. Since 2011 that I've been tracking it, it's been going steadily down. Used to be, do I have this on a slide? No. I think I have it in another presentation. I actually have a slide about this. But like in 2011, the IRS filed somewhere close to, I want to say it was 750 or 800,000 liens. Last year it was barely over 500,000 liens. And the reason that that number has been going down, much to my chagrin from a marketing perspective, is the fact that the IRS has to pay the filing fee with the Secretary of State or the county clerk, okay? And it's usually $10 to $25 depending on where you're at. Well, the IRS budget obviously getting slashed. You know, they spend tens of millions of dollars a year filing these, and then their budget for that has just been getting slashed. So the number of liens being filed has been cut by a third in the past 5 years. But that doesn't mean that the lien doesn't exist. Frank asks, if the 668Y is not yet filed, how does anyone know that the, again, I don't like that term, the silent lien exists? Well, they don't. The 668Y is the public notice. So if that's not filed, then the public doesn't know. But if you prepared the tax return, you should know, right? So if you prepared the tax return, you should tell your client, look, there's a tax lien against you, okay, if you don't pay this. if the taxpayer wishes to sell real estate, how is the silent lien enforced? It's not. But one would argue that as their tax professional, you have a duty to inform them that the tax lien exists and that they need to go through the proper procedures before disposing of assets that are covered by the statutory tax lien. Otherwise, later on in the collections process, it can, will, and does come back to bite them in the rear end. Okay, so if you're selling real estate and you don't do a certificate of discharge, even though technically no 668Y has been filed, the IRS can come back and be not very happy about that asset disposition. So even if it's only a statutory lien, make sure you go through your lien withdrawal, subordination, discharge, et cetera, processes on assets. The filing of a 668Y does come with appeals rights. A lot of practitioners don't realize this. But you do have 30 days to appeal this itself. And there are plenty of situations, it's beyond the scope of this particular presentation, but there are plenty of situations where you want to appeal that lien, and you actually can. And you know, if you just ask them because you don't want the lien on there, you're not going to get it withdrawn. But if you have a valid reason, especially a reason that will help facilitate collection of the tax debt, then the IRS will withdraw that. A common example is a defense contractor that owes money. They will lose their security clearance and therefore lose their job if they owe the IRS money. And therefore, and if they lose their job, then it's the IRS isn't going to get paid, right? So that's one common argument to make. 30 days after the notice of federal tax lien, you'll get a CP 504. This is the notice that says this is the first notice of intent to levy, and it is the notice that the federal government can seize your state tax refund. Okay, state tax refunds are not subject to the further notice requirements of accounts receivable levies and bank levies, wage garnishments, etc. The CP 504 is the only notice of state refund seizure that the IRS is required to send. This notice does not have appeals rights. There are no appeals rights attached to this particular notice. And the only teeth that it really has is, again, that seizure of state refunds. But it is another opportunity for the taxpayer to resolve the tax liability. And there is a 30-day window for this notice as well. Time for polling question number 2. What do cows read? Be sure to put your vote in and hit the submit button, or whatever the button says. I don't actually know what the button says. I assume it says submit. So again, we've had some issues the past few weeks. Every week I get at least a small handful of people that I'm assuming that they forget to hit the submit button on one of the questions. Thanks, Walter. It does say submit. So yeah, make sure you hit that submit button, because if you miss a question, then I can't issue certificates. And we're already at 98%. In the first question, there were 97%. So I already know that there were people that missed the first question that are answering the second question. And because they missed the first question, I'm not going to be able to give them a certificate of completion. So don't be that person. All right, 5 more seconds. 3, 2, 1, yay! What do cows read? Cattle logs. Wah, wah, wah. Daniel, yes, letters always come in this order. Oh, hey, time for a commercial. Please be sure to tell your colleagues about these webinars. Go to freetaxcpe.com. Again, go to freetaxcpe.com. That's freetaxcpe.com. One of the things that I'll be doing is Dan Han and I, he's a CPA in Florida, we teach a series of live seminars. I did some here in the Northwest. He's done a loop down in Florida of our level 1 representation class. It's a full day, hands-on seminar, and we did try to schedule a full day online version of that, but we only had a couple people register, so we weren't able to do that. And the feedback I got from a lot of folks was that they simply weren't able to commit an entire day to being online on a webinar. So what I'm going to do is over the next 3 weeks, starting next week, I'm going to be doing 3 2-hour webinars, and it's going to be our entire level 1 technical curriculum, and those will be presented in a webinar format. And I'm still working out the details, but I'm going to do the best I possibly can in order to actually do the hands-on exercises. So actually completing a 433F, walking through installment agreement calculations, RCP calculations, things like that. And the way I'll probably do that is I'll probably promote a couple of attendees up to the to be panelists, and so that we can actually have a small group that we are going through the exercise live on screen with at least a few folks, okay? So those will be presented over the next 3 weeks. Those will not be free. The live seminar is normally $150 to attend live, so it'll be about the same price point per hour, and I will have that posted on the website, freetaxcpe.com. I'll have those posted. I'm going to try to get those done this afternoon. So they will probably be, let's see, let me do math. I can't do math in my head. So those will be $29 a piece. And we'll have 3 of them. There'll be 2 hours, 2 CPE hours each. So those will be on freetaxcpe.com. Check later tonight. End of commercial. All right, let's talk about probably the most important notice in the entire IRS collections cycle. This is the letter 1058. That is the notice number if it is issued by a revenue officer out in the field. If it comes from ACS, it is called an LT11, but it is essentially the exact same letter. Federal law, Internal Revenue Code, requires that the IRS send a notice of intent to levy before they actually do. Okay? What the IRS could do is they could meet this statutory requirement via the CP 504. okay? The notice that comes after the tax lien that says we can take your state tax refund. The CP 504 could be used as the statutorily required notice of intent to levy. But just like the IRS, by procedure, will send you 2 bills most of the time instead of 1 that they're required to, they give you 2 opportunities to know that they can levy you. So the CP 504 can basically be considered a courtesy more than anything else. The letter 1058 is the one that has real teeth. This notice is sent 30 days after the CP 504, and the IRS may commence levy action 30 days after issuing the LT11 or 1058. This is the letter that contains CDP appeals rights, okay, collection due process appeals. Over my career, well over half of all my cases have been resolved in appeals. There are folks that claim that the taxpayer advocate is the best thing since sliced bread at the IRS, and I wholeheartedly disagree. I consider appeals to be your best friend at the IRS. Appeals personnel have greater authority, usually greater experience. They have less, what's a good way of putting this, less emotional involvement, it seems, in cases. A little bit more rational, maybe because they're not out in the field all the time like ROs are. But appeals are great folks to work with, okay? Do not hesitate to kick things to appeals. After receiving a letter 1058, you have 30 days in which to file the actual appeal request, okay? Now, sometimes revenue officers, because you actually file it with a revenue officer, sometimes revenue officers will call you as soon as they get it and say, whoa, wait a second, we don't need to kick this to appeals. And then you tell that revenue officer, well, great, then work with me, okay? But if you're not going to work with me, kick it to appeals, and I don't want to talk to you anymore. What I normally do on these is I'll get the letter 1058 in the mail, I'll look at the notice date, and then I'll add 20 days to that, and I'll put it on my calendar for 20 days after the notice date, so 10 days before the due date, to actually file the appeal. Why do I do that? Well, tax resolution is all about breaking the cycle, okay, which means that you need time in order to turn your client into what I call a good little taxpayer, okay? It takes time to prepare their unfiled tax returns. It takes time to do, 20 years worth of bookkeeping. It takes time to get them in a position where they are, where their finances are rearranged. They're operating under a budget. So you got to set up payroll so that they're making their federal tax deposits every month or biweekly. They're making their estimated tax payments, right? It takes time to get all that done. So even though it typically takes 4 to 6 months to get an appeals hearing, there's no rush to get the actual appeal request filed. By waiting until 10 days before the end of the 30-day appeal window for filing the appeal request, I buy my client an additional 20 days, okay? That 3 weeks can often be the difference between the taxpayer being able to make something work or not, okay? So that's why I hold on to the CDP request until 10 days before it's actually due. And then when I send it, I send it certified mail return receipt, I fax it to the RO, email it if I have an email address. I send it multiple methods. Most of the time, a revenue officer will just kick it on to appeals and not even talk to you. Sometimes a revenue officer will say, hey, let's work something out, because they are part of their annual performance review process. They're employees just like everybody else at the federal government, and so part of their performance review process has to do with case closure. And so if they're kicking everything to appeals, then that's going to reflect negatively on them on their performance reviews. It's not uncommon for an RO to get a CDP request from you and say, okay, fine, let's just work something out, okay? Because the more cases they kick to appeals, the worse it makes them look. So 30 days after the LT11 1058 arrives, after that is when the IRS can start levying bank accounts, accounts receivable, customers, paychecks, all that fun stuff. So 30 days after this notice is when all the really bad things start happening. Now you'll notice that at this point, for a 1040 debtor, we are into what? May, June, July. We're pushing end of August if they filed in April. So it is not a fast process. Okay. So keep that in mind. For a business, this is a never-ending cycle. Notice that 4 months in, by the time we get to this point, it's already time to file the next 941. So let's talk now about field assignment. Field assignment is the part of the IRS collections process where a human being gets involved out in the local area. All of these acronyms that you see on your screen, I don't know what all of them mean, and there are actually even more. The inventory delivery system is a prioritization algorithm. It's a computer program that determines who should have the highest priority for assignment to a revenue officer. Okay, so it routes cases from ACS, the automated collection system, through the field collection process. And IDS, the inventory delivery system, it makes its determination based on inputs from all these other computer systems. ACS, automated collection system, ASFR, automated substitute for return system, TDA, TDI, I honestly don't know what those mean. IDRS, was it integrated data retrieval system, I think it is, plus other computer systems at the IRS. What the acronyms mean isn't important from our perspective, but just know that there are factors that elevate a case for field assignment. That assignment process is risk-based. That's what the computer crunches all this data from all these other databases and assigns a priority score. In general, the exact formula is not made available to USINs, but the general formula is based on some common sense criteria. One is the amount due, obviously. Somebody that owes $5,000 is a much lower priority than somebody that owes $1 million. The prioritizations jump at certain intervals: 10,000, 25,000, 50,000, 100,000, 150,000 on up. Also, the tax type. 941s have a higher priority than 1040s in general. Although a large multi-million-dollar 1040 debt is going to have a higher priority than a low dollar 941 debt. So last I heard, MC Hammer still owes $800,000 to the IRS. That 1040 liability of MC Hammers is a higher priority than, you know, Joe's Donut Shop that owes $500 in 940 liability from 2015. Okay, that's just going to have a higher priority. The taxpayer's history, so their filing history, their delinquency history, their debt history are all factored in. There are also certain cases that have specifically defined prioritization bumps. So, and FC is field collections. So first of all is delinquent return investigations. Over the past couple of years, there's been a significant initiative at the IRS to close out old delinquent return investigations. And in fiscal year 15, the IRS made some significant progress on this. And they closed out 500,000 out of the 3 million open delinquent return investigations. Now, obviously, the reason that this is such a high priority is because of two things. One, the IRS doesn't know how much you owe until you file a tax return, okay? Especially if they don't have wage and income information to make that determination on an SFR for you, okay? So that's one reason for the delinquent return investigation priority. What was the other thing I was going to say about that? It just slipped my mind, sorry. Shoot, I totally bombed that one. Large cases, if I think about it all, I'll come back to it. Large cases also have a higher priority. There is a recent initiative that just started in the past year called the Federal Tax Deposit Alert Program. This is an early intervention effort for businesses that are pyramiding, accruing additional 941 debts every tax period. So this special initiative has two pieces to it. One, a business that has a perfect track record, and then all of a sudden they stop making federal tax deposits. That early intervention program is an inquiry system. It's not an assessment or collections system, but revenue officers are involved in order to offer assistance to small businesses for you know, to help them get back on track, all right, before it gets out of hand. Because historically, businesses will go 2 years without ever hearing from the IRS about their 941 debt. And then the other part of the initiative is that businesses that are continuing to operate, continuing to file, but not paying, and trying to get earlier assistance to them in order to minimize the damage. And then there are also special compliance initiatives. These are special programs within the IRS with the effort to improve compliance amongst particular groups of people or in specific geographical areas or you know, some sort of special project having to do with collections. Let me get to a couple of questions here. When you fax or email the CDP request to the RO, do you suggest getting together to resolve or just let them make the decision? Good question, Jim. It depends. If it's a revenue officer that I've been having a good working relationship with, then yeah, I'll suggest, hey, let's get together and just fix this. If it's somebody that has been aggressive, then I won't even bother, okay? FC stands for Field Collections. Field Collections. David asks, is there a list of these 941 non-filers? No. There is no way to obtain a list of non-filers until a tax lien is filed and then they're a debtor. But prior to that, there is absolutely positively no way to find out who they are. So how do we break the cycle? Number one, when you get a client on board, part of my client intake checklist, and it is a written checklist. I'm a huge advocate of using processes, written processes, so that you don't miss anything, and so that everything gets done the same way every time, right? It's just a time efficiency thing, so you don't have to think about what you have to do. You just do it. So one of the first things on my checklist, within 24 hours of being hired by the client, I'm talking to the revenue officer. If there is a no revenue officer assigned, then I'm calling the tax practitioner priority service. Okay, you know, our backdoor number, especially for us. And what I'm doing, one of the first things I'm asking for is a collections hold. I always start with 120 days. Rarely do I get it, but always ask for 120 days. The worst that they can do is say no. More often than not, I get a 60-day collection hold, and 2 months is generally more than enough time to get all the returns together and the books done and all that fun stuff. So that's number one. You don't want them getting levied while you're trying to fix them. The next thing that you have to worry about is getting them current and compliant. Like I said at the beginning of the webinar, there is no resolution possible if they're not current and compliant. That is the mantra of tax resolution. Current and compliant, current and compliant, current and compliant, okay? You gotta get them making their federal tax deposits or estimated tax payments so that they stop accumulating additional tax debt. They also need to get compliant with filing requirements. On the 1040 side, the service will generally request the 6 most recent years worth of returns. I never actually knew where that number came from until this year, believe it or not. Learn new things all the time. But the source of the 6-year rule on returns on the 1040 side is the criminal statute of limitations for criminal liability for failure to file a return. I had an attorney explain that to me earlier this year. So that's where that comes from. On the 941, 940 side, file everything. So get returns filed. Then you can work on the final resolution. Desmond, no, we have not had the third polling question yet. That'll be here in a moment. Understanding this entire cycle is critical to your ability to resolve tax liabilities. So you need to understand the cycle, and you have to pinpoint where your client is in the cycle. Fortunately, that's pretty easy to do simply by reading the transcripts and looking at the notices that they bring you, assuming that the taxpayer didn't just throw them all away, which they often do. And I would highly encourage you to map out your state collections notice cycle as well, okay? Find out what your state Department of Revenue does that equates to what we just spent an hour talking about, okay? Every state does it differently. I can't possibly cover every state. But it's worth knowing it because you're going to have state tax liabilities a lot of times with these IRS debts as well. And if you want some, instead of counting sheep, if you would like some super snuggly, cuddly bedtime reading, check out Internal Revenue Manual section 5.19.1, which goes into this notice cycle process in even more gory detail. Okay, now polling question number 3. What happens when a frog's car breaks down? And remember, be sure to select your answer and hit the actual submit button so that GoToWebinar logs it. If GoToWebinar does not log an answer to all 3 questions, I cannot issue a certificate of completion to you. Let's see. Terrence asks, what do you charge professionals for your assistance? Sorry, I am not currently available for consulting because I am not in practice anymore. I shut down my practice at the end of last year to focus full-time on my tech startup here in Seattle. So sorry, I am not available for consultation. So I will leave the polling question up for another 10 seconds. 5, 4, 3, 2, 1. All right. Closing the polling question. Hit that submit button. All right. So thanks for attending the webinar. Appreciate it. If you submitted and answered all 3 polling questions and we're on for at least 50 minutes, you'll get your certificate of completion here in the next few days. And also, our level 1 tax resolution curriculum, normally a $149 full day live seminar. Dan just did a bunch of them in Florida. I've done a bunch of them here in the Pacific Northwest. But if you were not able to attend one of those, I will be presenting the curriculum over the next 3 weeks. So next week, the week after, and the week after that. 2-hour CPE webinars each. They'll be $29. And I will have that schedule posted on the website. Yeah, if you registered for the session tomorrow, but we're on today, that's fine. I will be presenting this again tomorrow. So if you have nothing better to do tomorrow and want to hear it all again, come on by. The exact same GoToWebinar link that was emailed to you for today will also work for tomorrow, okay? So if you want to hear it all again, or if you missed the first half or something like that, then come back on tomorrow. Tomorrow, 10 a.m. Pacific time, that's 1 p.m. Eastern. And yes, Delma, if I know at least on the IRS side, they don't like your repeating hours, so you can only earn 1 hour. You can't double dip and take the same class twice. And I'm fairly certain that's the same for CPAs. So, so there you have it. Again, check out freetaxcpe.com. I will have the level 1 tax resolution curriculum spread out over the next 3 weeks. Those will be $29 per session, 2 hours of CPE each, total of 6 hours for the whole thing. And those will involve live hands-on exercises to help you get started in tax resolution. I want to wish everybody a wonderful Thanksgiving. Have a good time with friends and family, or whatever else you do to enjoy the day off. And I will talk to you next time. Bye-bye.